Hey now, it's Dan Aberhart here, and welcome to the Growing the Future podcast, where we talk to folks who like to innovate, collaborate, and transform the agricultural industry. Thanks so much for joining us for Season 5, Episode 14. I like to say that strangers are just friends that we haven't met yet, and that was certainly the case when I met this individual just across the aisle in Ag in Motion this year, and we became fast friends and have some very mutual interests that we're going to discuss on the show today involving the markets and where everything's going with commodities and agriculture. So stay tuned for that. But before I introduce today's esteemed guest, I'd like to remind you to check out the Aberhart family of companies online, starting with aberhartfarms.com, where we grow food to feed the world in Langenburg, Saskatchewan. Suregrowth.ca, where we offer precision agronomy consulting services. ConvergenceGrowth.com, where we accelerate solutions across food, health, and agriculture. And AberhartAgSolutions.ca, where we deliver one-of-a-kind fertility solutions of the future to your farm. And you can get notified by about all of our new episodes by signing up for our newsletter at growingthefuturepodcast.ca. My next guest grew up on the family farm in Atonia, Saskatchewan. He's one of that special breed of Saskatchewan farm boys. He attended the U of S, where he achieved a degree in agricultural economics. He is a grain market analyst who writes two highly respected newsletters, which you may be familiar with, the Klarenbach Grain Report and the Klarenbach Special Crops Report. Of course, he's using his expertise in technical analysis strategies, which I just love. I mean, it's just incredible how these patterns repeat over and over, no matter, what age we live in. It just seems to be a constant. We'll talk about that. How to make informed predictions about market trends and price movements. So today we're going to talk about his journey in agriculture professionally. We're going to talk about how he uses technical analysis to advise folks via his newsletters and his public speaking. And where are things going today? It's never boring in the market. So welcome to the show, Trent Klarenbach.
Well, thank you, Dan, and thank you for that great introduction. And it's my pleasure to be here. It's great.
Yeah, it's going to be a good conversation. Folks are always wondering exactly where things are going and beyond producing yield. That's one of the huge factors is price. And of course, farmers are price takers. So being in tune with the market can be profitable, and it can also help you sleep at night. So Trent, how did you get to be this guy who's writing these newsletters that people are reading and taking advice from, an expert on the market? What does your journey to get to where you are today look like?
Okay, so I was always fascinated with the markets, the grain markets. So where I grew up 2 miles west of La Porte, Saskatchewan, 8 miles west of Etonia, my neighbor to the east was a gentleman by the name of Reinhold Nunweller. Now, Reinhold Nunweller, what he did is him and two gentlemen business owners from Eston started Allstate Grain, which really kick-started the special crops processing on the prairies and the exporting of lentils and peas, etc., out of Western Canada. Reinhold, for example, he introduced canary seed to Western Canada and brought it up from, I believe, Texas in the trunk of a car, unloaded it. Him and a few neighbors, they went through this process of growing canary seed. How do they harvest it? Some of the stories that I've been told, the harvesting experiment was quite remarkable. He created a market for special crops and canary seed in particular. My family was a mile to the west of there. My father worked for Reinhold and actually unloaded that bag of canary seed out of the trunk of his car when he brought it up from the U.S. So very influential individual in my life. And again, to the west was a fellow by the name of Raymond Somerville. Maybe you see the blue and silver Somerville Farms trucks on the road. Well, Ray was actually had cattle in feedlots in Alberta, and he'd grow his own feed, wheat and barley, and he'd truck it to his feedlots in Alberta, to his own cattle. At that time, it was against the law to ship your grain from Saskatchewan and sell it in a different province without going through the Canadian Wheat Board. Ray got charged by the Canadian Wheat Board, went to the Supreme Court of Canada, and eventually opened up that interprovincial border across Canada for shipping of grain. So those two individuals were strong influences on my father, strong influences on me. I always had a fascination with grain marketing, had dreams of having my own exporting business, and gave that a little bit of a whirl. But yeah, anyways, so I went to study ag economics at the university, kind of fell in love with agriculture through my roommates there. I farmed for a while, went into environmental consulting, exited out of both of those. And my son in 2015, he said, Trent, I want to quit university and trade for a living. So with an ag ec background, I thought, well, you don't have time to go through all the fundamentals, and we don't have enough money or to spend the time, 40 to 100 hours on an asset to determine whether it's investment worthy. But he talked to me about technical analysis, which was just lines on a chart to me. It's just, what is this? How can you possibly be successful trading or making investment decisions with lines on a chart? So, but I believe you can learn a lot from the next generation, and I went down that rabbit hole, found some great mentors, and learned to see the value in technical analysis. So now trading and investing is it's the most difficult thing I've ever done in my life. The most challenging, just simply the most difficult business I've ever been in. But I eventually developed a proficiency, and I recognized what I felt to be is a information void in grain marketing and information for farmers. So I started publishing my newsletters, and started out with the Klarenbach Report, which was attempted to do equities, cryptocurrencies, and grain markets, and then eventually specialized into grain and the special crops, individual reports. So that's a short summary.
I love it. I mean, one of the big things that I wanted to ask you was this juxtaposition between learner and expert. Because as an expert, I mean, you're essentially the commodity or the currency that you're trading in is your knowledge and your expertise and the calls that you're making on the market. But at what point of course, you're always learning, but at what point do you realize, okay, I can be an expert on something as complicated? Like you say, it's the hardest thing you've ever done. But all of a sudden, you're throwing your hat in the ring to say, well, I have some of the answers, at least to what we know to be true in the constructs of these, technical analysis. I wonder, how was that journey for you going from learner to expert?
Well, I'm still learning, right? So I make a lot of mistakes. I'm not right 100% of the time. I'm constantly learning, reassessing. It was a long and painful process to get to where I felt that I could publish a newsletter with my name on it. That was never the initial goal, but it was a long and painful, mentally demanding. The mental capital in trading and investing is immense. The mental capital requirements is just incredible. It's hard to fathom once you start into it. Tuition was expensive, no doubt about it. Tuition has been expensive, but you just you get to a point where you're just comfortable and you feel that you can put your name on a report and distribute it, and that's where I got to. There's no defining moment, I don't think, or it's just a process, and I'm still working on it too. So I'll be better next year.
You'll be even more right.
Yeah, well, yeah, hopefully.
If that's the metric, right? Or maybe you're just, signposts on the road there that a person could navigate better than, not having signs and a highway to follow. But I wanted to ask you too, you mentioned that you saw a gap in the agricultural market landscape in terms of information about trading and investing and commodities and stuff. What does that look like, and what gap are you specifically bridging here with what you do and what you know, Trent? Where do you fit in?
So I guess I'll call them my mentors. They're the individuals that I studied in how they viewed the markets. And Basically, it comes down to this, is only price pays. That is a term that Brian Shannon coined, is only price pays. And when you think about that, that's all that matters, right? It doesn't matter what we think the market should do, that we think red lentils should go up, or they're underpriced, or canola is too low, or there's a drought in my municipality and therefore canary seed is going to rise, or there's, so all these, what happens is you get all this news and all these interpretations of the news, and it gets very, very noisy. And the world's a big place. The grain markets have a lot of factors in determining, the values. There's currency, there's supply and demand metrics. There's, you throw a war in there, a conflict, a tariff that came out of, perceivably nowhere, and all these affect the price. So I feel it's very difficult to interpret the news. In my own case, I'm never sure if the news is accurate. I feel at this level, even with the internet, the news might not be timely. Has it been interpreted properly? I don't know. Am I interpreting it properly? I throw in my emotions so I'm not a grain farmer anymore, but I was a grain farmer, and I talk to grain farmers all the time, and the one common theme is the price is going up. That's the one common theme, and I get that, because it's when I'm in a position, say my Bitcoin position, right? I look for reasons why that price is going up. In all my equities, it can get very clouded, and your biases. We're just emotional creatures, so all our biases, take effect and impact our decision-making process. So the idea that only price pays really resonates with me, because that is the one thing that I know to be certain, right? I know I can look in the futures and I can see what corn traded at today, and that is the price. And I feel that the information, the gap that I see in the grain marketing is a noiseless information source, or a noiseless market source. I think there's great value in that. So.
Oh, it brings to mind so many different questions. But I guess to be rather pointed in this, are the markets a map of human psychology and emotion as such, and they will never change no matter how much AI or trading quants you throw at it? Or is it actually a reflection of the natural order, like the golden spiral, the Fibonacci sequence? We see the same things in seashells as we see in the Milky Way, as we see in, I don't know, maybe the way the toilet flushes in Australia. I guess I'm being facetious there, but we see this pattern all over and over in nature. Maybe it's all the same. Maybe I'm asking the same question, but is it really that simple, or how complicated is it?
That opens up another conversation, right? Are we in a simulation? Are we in a matrix? And
just ones and zeros. Let's be real.
That's above my pay grade. But you know what? So technical analysis is a study of the psychology of the market and the market participants. So, if you look at, where should I start with this? The chart patterns, you'll see the same chart patterns in the equity market. You'll see that you do in the cryptocurrency space. You'll see it in the forex and the bonds and commodities. You'd think they're not related. You wouldn't think that the durum wheat price of 1996 has any impact on the price today, right, or in the future, right? But the price is memory, and human participants, whether they're actually looking at the charts, they all kind of behave the same way. So, for example, you can take a 50-year chart of General Electric and overlay a 12-year chart of Bitcoin, and they look remarkably similar. And when I started my Special Crops newsletter, a very intelligent buddy of mine questioned whether that technical analysis can work and is effective, or can be effective, I'll say can because there's different ways to use technical analysis. In like low volume crops like lentils or durum wheat, right? But you know what? Those markets behave the same way. The same chart patterns exist on a large green lentil chart as it does on a durum chart, as it does on a Bitcoin chart or a Ethereum chart or General Electric chart or Apple chart or CAD, the ruble, right? It doesn't seem to matter. And I think the reason is the one common denominator is the human participant. And whether it's an algo, which was designed by humans, right? The computer trading programs, the bots, the algos, they're all designed by human beings, and we have, I guess what it is, we're all in search of feeling good. We try to avoid pain. We want pleasure, we avoid pain. So really, if we're losing too much money, we're more apt to sell. If we start making money, more apt to hold our position, and those patterns just play out time and time again. There's a market structure which I presented to a group of farmers. I had the opportunity to present to a local retail to 3 different farmer groups, and this spring, and I introduced them to the 4 stages of the market structure, and how a number of these commodities were entering into what I considered them entering into the stage 4 decline, and that was back in May in April it was, and those patterns are playing out. Am I a genius? No, I just, you know what I mean? It's just the way things work. I don't know how to describe it, but it's
did they basically try and take away your donuts that day? Like nobody wanted to hear it? Like,
yeah,
I mean, who wants to hear that news?
Well, that's the simplest way to gain followers, and is to tell people what they want to hear. There was an interesting post, I believe I retweeted it on Twitter, and I've had a few people reach out to me, and when I have a bearish idea, I've actually had people who respect my analysis say, how do you expect to, tongue in cheek, they're saying, how do you expect to have subscribers if you tell people you're not telling people what they want to hear, right? So it's just kind of the reality of it. But
yeah, it was very interesting. I was speaking to my brother here at Harvest, and he was talking about how he expects that things in the commodity market will actually get a lot tougher, and we never think about how tough they can get or how high it can go. But the fundamental changes that'll be required if the markets change in such a way that we don't have that margin, it's going to be a pretty visceral experience for the market. There's a lot of different tools out there, and you talked about your journey. I wonder, do you have specific tools? Like, do you have a top 3 or top 5? I mean, you can have all the moving averages, the MACDs, stochastics. You've got your candlesticks. You've got your resistance levels. Is it a broad picture of things? Do you take the top 3 simple things, or do you kind of noodle with a whole bunch of things? What's your methodology, Trent?
Well, I've often thought, how could I program this just to take my emotion out of the decision making? And it's got really subjective, but really the easiest thing to do is become a trend follower. If you can identify a trend and a breakout above that trend, so that is the easiest way. And the easiest way to do that is using moving averages. I use a simple moving averages to help with that analysis, with my trend analysis. But it doesn't really matter if it's exponential moving averages or simple. It's just, where is the price moving? Is it above those averages? Are we forming into like a stage 2 breakout in your market structure? That's where you want to be long. But then, I was teaching a course, I still offer it once in a while, and just basically the foundation of investing and trading. So when I started this journey, I was looking for the Holy Grail, right? I was looking for that 813 moving average crossover. I was, whatever that was, I see some guy on YouTube say, this is the answer, this is how you make money. Try it, and you know what I mean.
Yeah.
And you probably make it.
$10,000 of courses later.
Yeah. Well, yeah, absolutely. And you try it and you make money. The way the world works, you might make money the first time, and then after that, it teaches you the law of possibilities that it's possible to be successful, and then you realize the world, the universe, and the market teaches you that you got to put the work in to maintain it. So moving averages are key for me. I love the Fibonacci's sequences, the retracements, the extensions, what you mentioned. I throw in a little bit of TD sequential. What else am I doing there? There's Elliott wave. I have I'm a jack of all these trades and master of none of them, because I don't want to rely on any one of them in particular, because you really want to build a case with as many of these indicators having congruence and to help support your thesis. So ideally you want to be in an uptrend, breaking out, ascending triangle pattern in an uptrend, maybe, on a second wave, maybe a wave 3 of an Elliott wave. You look for all these. Maybe hopefully you're not at a 0.618 Fibonacci level when that breakout happens, and you don't want to be on a green 9 when that happens either, right? So you just try to use about half a dozen different ideas, which I rely on, but there's no real simple plan to doing it. So.
Jesse Livermore, the famous trader, once said, "I made more money by sitting than doing anything, sitting on his hands and waiting." I'm wondering, how good are you at sitting, and does producing a letter, which you can timestamp any of your predictions, sort of force you into a discipline of, well, I said this, I knew this at the time, maybe I want to wiggle here, or you're doubting what you've prophesized, but I mean, how does your discipline been developed, and does sharing that publicly put you in a state where, hey, you're the trainer at the gym, you got to show up 5 a.m. You've put it out there publicly, you're going to do it. Is that a useful function in the market for yourself as a market participant, making those calls?
I feel it's been helpful for me. There was a time last year in a couple crops where I did let some outside noise enter in, and I made a call without waiting for confirmation. And the interesting thing about the special crops, it's a lot of sitting and waiting, because they move relatively slow. And I don't believe in filling your inbox with emails just for the sake of sending emails. So right now, I'm not sending out. I don't publish every Tuesday, for example, because just for the sake of publishing. And quite often the markets move real slow, so the analysis stays on the website. A person gets it in their inbox, they can review it, and I try to provide levels where this analysis will change, but until then, we're staying the course. But it is like, you're right. Sitting is the biggest part of the market. It's the hardest thing to do, because you get bored. You get bored when I'm trading. I want to do something, right? And it's usually not a good idea when I get bored. And same with the publishing. It's, I try to provide updates, but it can sometimes be difficult in the special crops market, because they're relatively slow moving, right? And until the trend changes, and then they move really quickly. But it's publishing has been a great tool, I believe, for me. There's a quote, and I'm sure you're familiar with it. The teacher learns from the student, or something along that. So as I provide educational content with my publication, it's actually helping me. Yeah.
You talked about the 4 stages of the market and how we're in stage 4. Walk me through. I was just looking at some charts before we came on here. Wheat, corn, canola, and 3 months is one thing. Then you zoom out to 6. Then you, okay, we're in a downtrend a bit here. But then you zoom out, and it's like, whoa, the whale surfaced, and that, when the whale surfaces, that's when the harpoons come out. I mean, Walk me through, if you could briefly, some of these 4 market stages in terms of the context of what we see in some of the most extraordinary market activity, I think, in our lifetimes, if not the lifetimes of our fathers. Really, a huge market event here, and maybe even related to your personal business, where stage 1 you saw it, stage 2, stage 3. Talk us through what's happened here in the last couple of years, how that relates to the stages that you talk about, and what your personal journey was through the market in the last couple of years. That's a big one, I know. But if you're able to sum that up, I think I'm very interested.
Okay, I'll try to answer your question here. So I think it was in September 6th or September 9th, 2020, I published the Klarenbach Report, amongst other. I had equities and cryptocurrencies. It was too much information in one report. Took too long to complete. But I did have in there, I started talking about corn, wheat, soybeans, and I think canola was in there too. And I discussed that this could be the dawn of the golden age of agriculture. And the reason I thought that could happen is I saw some chart patterns that looked to me like we were breaking out of what I call a stage 1 accumulation. So the stage 1 is this, if you can envision, let's envision the plains, right? The plains leading up to Calgary, right? They're nice and they're flat, and there's consolidation, the price is moving sideways. We're starting to get some higher highs, the elevation starting to rise as you get into Calgary. And then that is what I call the stage 1 accumulation, where we're going sideways, consolidating through a narrow band with no clear direction of an uptrend or downtrend. And I saw that in a number of those commodities in September of 2020. And then I had some ideas on what could happen with soybeans, and honestly, they exceeded all those ideas, right? And I had an ascending triangle on Chicago wheat, and it blew up. Ascending triangle, you could do a measure move and get a minimum move, and it's called a measured move, and it blew through that, So around September is when. That was maybe it's October, I forget the dates, but that was when we broke out of the stage 1 accumulation into a stage 2 markup, and that is when the trend has broken out of a sideways pattern. We're in a clear uptrend. An uptrend is defined by a series of higher highs and higher lows in the price. And, well, we were certainly in an uptrend, right? You can see that in all those charts. And as all trends come to an end, we started seeing signs of that. When was that? That would have been in December of 2021, January 21.
Yep.
And I recognized the trend was going to change in some of those commodities, or had the potential to change, I should say, and that's what happened. And then we entered into a distribution. The market topped, came back, went sideways a bit, and then I would say last spring, we broke through that, made some lower lows, and went into a stage 4 decline. And you'll see that up and down pattern, just like moving into Calgary, the mountains, climbing to the peak of the mountains, coming down into Vancouver. And you'll see that on every time frame, on a 1-minute chart, on the weekly charts, the daily charts. It shows up everywhere. So.
Beautiful analogy, and really historical ride for everybody that was on either side of it. Yeah. What do you make of it? What is the fundamental underlying mechanism that's going on here? How historic has this been? What's your take on this since 2020, when it gained all that energy and then just exploded in a way that really, I don't know, we've hardly ever seen before. I guess if you zoom out far enough, of course. Like, what I love about these things is this fractal, these charts. If you showed a person a chart, you wouldn't know whether they're looking, like you say, at a 5-minute Forex chart for the USD CAD, or you're looking at like a 1 week chart for the last 50 years for wheat.
Yeah, they all move. That's all these commodities, all these equities, they move in the same manner. You'll see, even housing prices, and we've seen it in land over the years, right? We saw
Hmm.
that peak in the early '80s, and then into the '90s, and then this rapid rise up recently. It's just it's amazing how these fractals, as you call them, show up. They're present everywhere. You can overlay. Like I did this for a presentation a few years ago. I overlaid the 50-year General Electric chart over at the time the 10-year Bitcoin chart, and it was remarkable. How it's almost the same, right? So
When you talk about this event, how big is it historically relative to what we've seen? And are we gonna go back to a period where things are much less volatile? Are we gonna smooth out? Is it the wave dispersed its energy?
yeah, I don't know if I know the answer to that one or have a strong opinion on that. What's happening in a lot of these markets though is you're seeing ETFs now that are playing in the commodity space. So we have the soy B ETF, which is soybeans, corn, obviously is corn, cane is sugar, and wheat, WEAT is wheat. So what that's allowing people to do, it's allowing retail investors to invest in the futures market without worrying about margins, without maintaining a brokerage account. Anyone can invest in these. So a few years ago, and I wrote about it in one of my newsletters, we saw the rise in wheat at that particular time, and I just forget the time frame on that. It's a January, February 22 maybe, and I was tracking the mentions on Wall Street bets. Right? So that was
Yeah.
after AMC and GameStop and all. Remember, that's quite a run, and of course there's documentaries about that
Yep.
area now. And I do feel that retail investors buying these ETFs had some impact on the price of wheat, which if wheat, I feel where corn goes, wheat goes, or where wheat goes, soybeans go, lentils go. I believe a rising tide rises all ships, and I think that major tide is going to be corn or wheat. So
Yeah, I was going to ask about the kind of correlations that you look at. If the U.S. dollar is a major indicator, if oil and energy, there's correlation, all these things. Of course, we know there's a correlation with fertilizer and urea, and that's pretty easy to see, and that's easy to make sense of. But are you looking at correlations, inverse correlations, and different things to help you make your judgments and technical analysis?
I don't study it in depth. However, recently there's been an strong inverse correlation between the U.S. stock market and U.S. dollar, and there's likely to be, we see our correlation between natural gas and fertilizers. There's some correlation between grains and fertilizers. I haven't done an in-depth study into that. It gets a little noisy for me. So
I see.
yeah.
Is all of this further rational exuberance, with these ETFs and this money slushing around? Is that also a product of the fact that a lot of these governments, especially on COVID, got punch drunk on saving the world and just started printing money as though there's going to be no tomorrow because there's a pandemic and we need to keep everything going? I mean, obviously the fractal banking system has a big impact on everything, and maybe charts would be the same, relatively speaking, without it. But I mean, there's been an extraordinary amount of money printed, and it has to go somewhere. And all these inflationary pressures, is that related to money flowing into these markets to, relatively speaking, safe havens? How do you see that?
Well, I think it's had a direct impact on land values.
Yeah.
I think that's a bonus to landowners. I was really baffled because so it was interesting enough in January of when was COVID? 2020? I think it was, yeah.
Yeah, I think didn't it start spring 2020?
Yeah, February 25th or 28th is when the
Yeah.
market's kind of really. So, anyways,
Started
I
hearing
was
about
watching
China
that.
and COVID.
So just a little, it's a little story here. So in January, I was watching bonds. I was watching the 20-year Treasury bills, the Tilt ETF, and I was watching, and it was rising it's accelerating faster, rising faster than the S&P 500. The S&P 500 was making new all-time highs. But we had switched into bonds at that particular time because if you consider bond investors with smart money, they were putting more money into the bonds in the stock market at a faster rate. So that kind of suggested that it was a safe haven for them. So anyways, we've seen COVID come along and we've seen that crash. And then of course into February, March, and the world shut down. But for some crazy reason, people were spending money and asset values started rising. And, remember cars and houses and, I was in a state of panic there for a while because my business was very vulnerable to the price of oil and the success of oil companies, right? My other business there. And so we were pretty worried. I just couldn't, I was hunkering down. I wasn't spending any money, and I couldn't figure out why everybody was buying stocks and buying, everything, right? Food, guns, cars, houses. It was just, I didn't understand really what was driving that. I still don't really, but
Toilet paper.
Pardon me?
Toilet paper.
Yeah, toilet paper, yeah. Yeah, so I don't know, like it was, I think I got on a bit of a tangent here, but
yeah, I think it's all connected, and I don't know exactly how or why, but obviously it's had a huge impact. They've had to raise interest rates. Now everybody's committed to higher mortgages, and I guess it begs the question a little bit. The next logical conversation to me might be, well, do you feel, you're talking stage 4 decline, and obviously all these things probably move in lockstep in a lot of ways. Do you see it as a bubble? How hard or soft do you think the landing will be? What should we be thinking about right now?
Well, so I'm 52, so I graduated high school in 89, and farming in West Central Saskatchewan was not encouraged. My parents basically, I used to read a lot, so they thought I'd be a candidate for university, so they really encouraged me to go get secondary education, right? And then I went there and I decided I wanted to come home to farm, right? And they did not just, it was not encouraged by any stretch of the imagination. My dad, he was just trying to recover from those lost years of the 80s and early 90s. And he wasn't alone. In my RM, the Royal Bank of Canada was the largest single landowner at one point, right? It was devastating. And, I think that generation still, I think they're coming out of their PTSD, as I call it. But the memories, the pain runs real deep. We saw land values, I would just kind of back of the envelope math, 60-70% drop in values, maybe even higher than that. And it's hard to imagine that could ever happen again, but who knows, right?
Well, you're supposed to know, Trent.
Well, I know interest rates are going up, and I know how that's impacting asset values. Like, there's no two ways around it. If interest rates are going up, and so, for example, I did some math a few years ago, and there's better people with a calculator than I am, but it was roughly a 2% rate of increase in interest in mortgage rates would drop the affordability, or the house that you could afford, by 20%. So if you could afford, assuming that people will buy as much house as they can, and they can afford a $500,000 house, if rates go up 2%, then they can afford roughly a $400,000 house. That's 20%. I think housing from the peak, this is what I calculated a few years ago was 40 to 50% drop in values from the housing peak. If you can't, you're likely seeing investors. From my understanding, is you're not seeing quite the investment into farmland as you once did, with the higher, with the lower rate of return relative to, the bank accounts or whatever other investments they have, and that'll put some pressure on land values. It has to at some point, right? So.
We're living in a wild time. We're living in a time when, folks that are stealing from grocery stores aren't even getting stopped anymore because it's too dangerous to do so, because, there's inflation in a way that's made, average affordability for all kinds of things, creating a lot more pressure on, the people in their regular life. And yet we seem to have more, like people seem to be consuming almost more and more. Their expectations, their standards of living is going up. America's broke. I mean, they can hardly vote enough to get funding. They just voted recently over the weekend for another 45 days. Can you imagine being on okay, our household's going to continue here for 45 days. We agree. But beyond that, we're going to have to get together and gnashing of teeth and pulling of hair again. How do you see that having an impact on food? And I guess it kind of begs the question too, how much do you look at fundamentals versus technical analysis, or are you're just sort of a technical guy at this point, and the price will tell me when the price tells me? I mean, I can't go beyond that.
Well, I still got that ag ec degree, right? So I used to spend I spent a lot of my time on these topics over the years, and in hockey dressing rooms and beer parlors more than I probably should have. But yeah, it's increase of money supply increases spending and asset values. So that's I think it has to increase the price of food at some point. But I mean, if wheat prices go down, you'd think it would reflect on the grocery store shelves and the loaf of bread, but it's hard to say.
Yeah.
You're right about the inflation. I have a place in Saskatoon, and we're just seeing more and more. I would categorize them as homeless people in the last couple of years than there was before. And we live in an area, or we don't live, we have a condo in an area that's been regentrified, and it's, we notice an increase of people that I would say are homeless, and it's a sad thing, really, is what it is. So
yeah, no, it's significant, and it's alarming, and it's very disturbing, and it's hard to know what's all to be held to account and what to do about it, and maybe beyond the scope of this conversation a little bit. But I'm wondering, with your technical tools then, how are you getting in and out of the market, and what are you getting in and out of the market on? What happens when you see stage 2 breakout? Are you deploying the big guns? Are you going in on margin? What are you trading? Like you mentioned some other businesses. Do you, beyond giving advice, are you physically trading the markets along with some others that you work with?
Physically trading the markets, yeah.
You are, eh?
Yeah.
I see.
And right now, just for example, I had a uranium trade got stopped out. I looked at it today. It got stopped out yesterday, I think it did. It was a nice little trade, but I raised my stop when I thought maybe the trend was going to change lower. It's called a swing trade, so we're talking days to weeks on that particular strategy. So
yeah,
I looked like the move was getting close to exhaustion on the day time frame, so I raised the stop up and it got stopped out. So you just was trying to buying is easy, selling is difficult.
Well, I hope that's an indicator the threat of nuclear war is going down. If your uranium trade stopped out, it's like, whoo, we avoided Armageddon here and World War III, and everybody's But how much, I was going to ask you too, and maybe it's along the same vein of these other ones, it's really hard to answer, but I mean, are you going to make an over-under on the, new Ukraine-Russia border? Not to be flippant about it, but the geopolitics, I mean, that's obviously exacerbated this latest move, has it not? It's got to have an impact.
Well, I just couldn't imagine there'd be a war,
Right.
in Europe.
Right.
I had no idea.
It's like,
I
what is
just
going
missed
on?
that idea, right?
Yeah.
There's 500 and I saw the other day, 586 days or something of war now or something, or 590.
Yeah, the statistics are just mind-boggling.
So yeah, I don't know. Yeah, I have no idea where this is going to end, and I see some headlines, whether they're accurate or not, of countries are stopping spending and stopping monetary support of it. So if that's
Yep.
true, I don't know, right? So
Well, it didn't get into the latest bill, apparently, that they just passed to continue spending, and Ukraine wasn't a part of that. And obviously, I think as time goes on, Putin's playing the long game. And it's interesting, too, how this event seemed to come out of nowhere. But as you learn more about everything, well, this was obviously going to come to a head, and a lot of it makes a lot more sense as you become aware of different things. But so for you professionally, what portion of your business is teaching and providing this newsletter versus physically trading the markets? And if you've been able to physically trade the markets to make any sort of living, I just bow down, man. It's just like, wow, like that's incredible.
well, they kind of go. Since I started my newsletters, I've really been more or less focusing on the commodity markets, the grain markets. It goes hand in hand with what I'm doing. I do like the future markets better because there's only a handful of trading vehicles. I can get overwhelmed with the 4,000 stocks and ETFs in North America that there's something. The way I'm wired is I'm always looking for the best, and you can have paralysis by analysis, so it's kind of easier sometimes just looking at a handful of grain markets. I'm really focusing a lot of my attention on the newsletter business. I enjoy that. I provide I feel a strong educational component in my writing. I try to peel back the curtain a little bit. A lot of people think it's just total nonsense, hocus pocus. So I want to establish some sort of, this is the basis for this analysis, and then, if you read it, a person will eventually start to understand it, and they can apply it in every other aspect of their life. Their TFSA, their mutual funds, I guess, but TFSAs are other personal investments. So.
Right.
Yeah.
Well, if you could explain to our dear listener here with us today a little bit about how does a producer, whether you're a 2,000 acre producer, 20,000 acre producer, they all have some similar issues. They all have different issues. But how does one start to interact with your world in terms of, you can read the newsletter and you get some education, you get a general feel for the market, but are you making buy and sell recommendations? It's different for farmers because they're always long the market. They've always got inventory, so they're not speculating as much. But if I'm a producer and I'm just hearing about you, and I'm in my truck or in the combine, how does a producer interact with you? I guess there's different levels too, but how does one interact with your world there of trading?
So I have my newsletters and I publish them. There's different pricing options there, and with that subscription, gets access to me basically. So I just see a text came across my phone here right now of a gentleman. We talk back and forth. He asked for my opinion on the direction of these markets. In the cash grain markets, I will give what I call take profit price targets. So that is where I think we could see a top in the market. I don't always see those, but when I see them, I publish them. And I call a bearish sell signal. So this is where I feel this is a time to exit your position, go to cash. and that's your bear sell signal. So they're my strategy indicators, I guess. My strategy take profit price targets, and my strategy bear sell signals. As far as the futures markets go, what I do there, I just publish what I'm looking at and what my strategy says to do. I don't make direct recommendations that you should do this or you should do that, but I share with how I approach the market. So.
What are some of the biggest things that you see producers doing in the market that might be hindering their progress and capturing some of the value that's out there by having a good understanding of the markets and or working with a professional like yourself? So
when I was doing those farmer presentations this spring, and I've spoken at a few public events, so in what I try to do is encourage people to understand their emotions. What are they feeling, and why are they feeling this way? To develop some emotional granularity, so they can make better decisions. So, if we're starting to feel like your body can tell you so much about what you should do. If you get you'll get a tension, get a pain, your heart will start rising, and quite often it's telling you what you should do, right? So I try to establish that, or help people with that, but also in the psychology part of it, like the trading and investing and technical analysis is all about the study of the psychology of the marketplace. And I've written a few times about anchoring bias. Durham was $22, right? It's going to go back to $22, right? So guys are, I know some guys who I feel they didn't have a marketing plan, right? And they, rode that down to 11, and now it's back up to 14. But I mean, $22, they missed it. They think, it's going to go back there. I have those same struggles every day. Every day when my price gets close to what my target was and it didn't quite get there, I'll sometimes give it more time, and then you can end up giving back those gains really quickly, waiting for that extra cent or extra dollar. So I think it's our biases in our psychology and our emotions. Anchoring bias is one of them. Just I'm not even sure of the term for it, but just the idea that the price is always going up, and that grain companies are trying to steal from us. They're crooks. I hear all those things, and I think it can be very limiting, because if you just follow where the price is going, none of those things matter. But if the price is making new lows, lower lows and lower highs, and broke through a level of support, the price is probably going lower. And whether we think it should go higher or the price was higher at one time, we have to learn to ignore those ideas.
So what in the hell should we be doing in stage 4 decline? It sounds pretty terminal here. It sounds pretty dark, man. Like, what should we be doing? Burying more tins in the back 40, or what do you suggest?
As far as grain marketing, or
I mean, as far as commodities in general, I mean, the greater state of the world, I mean, it might be another podcast, but as a producer, I mean, looking at these charts, it's got to be a little bit white-knuckled, especially knowing, too, what's happened to, say, buying your favorite John Deere equipment, and, the price of fertilizer and energy and everything, people. I mean, it's all a lot more before we had this fantastic, wild chart movement. What are you telling people right now? Are you invested in the market? Are you out of the market? Are you short?
I've been long equities since October 17th of a year ago. And I'm right now, this past week, I've really been questioning whether I should take some of those positions off.
You're feeling it in your body?
Yeah. It's you try to, but we're still in an uptrend, so I haven't pulled the trigger yet. As far as, canola prices and wheat prices and corn, you can I think this is a time where you sell into rallies and you have a futures account and short into and take up short positions, I think. So.
Yeah. So is it hard to make that change? I mean, we've been so bullish, like you say, for so long, but it can only last so long, and it can go back to places that we don't even want to talk about what that looks like. Do you have any downward price target for producers right now? Is it batting the hatches, or we're going to have a soft landing, or it's going to start going sideways here? Do you have any insight on that?
I have downward targets on, I've published some corn, soybean, soy meal, oil, I believe. Canola, I haven't published any downward targets yet. And hard red spring wheat, I don't think I have either. But like the market is going lower, so it's not going to go in a straight line. But I do think I'm bearish. I've been bearish for a year and a half. So.
So how low is it going to go, do you think? And you don't want to give away all your special sauce, but like, what do those targets look like relative to where we are today, Trent?
Just thinking offhand, I think there could be Chicago wheat looks like corn actually looks like it could be in a short. It made a local bottom, so I think corn's going to see a rise in the near future. So if corn rises, I happen to believe that we're going to see a rise in the other wheats too. In particular, Kansas City wheat, which isn't really growing a whole lot up here, but it's we're on a weekly. I think we're going to see a rise in the next month in that product, but I think the trend is still down. I think these are rallies. As far as percent, I'm not answering your question because I don't really know offhand of what percentage.
No, you don't have to give exact numbers. I guess just some perspective on how much lower it could go, or if I don't know, if a person's looking at what to grow next year or trying to budget, or imagining what next year is going to look like. This year's sort of almost in the bank or in the bin.
Yeah, I think it'd be a good opportunity I think a person should really consider using the futures market to lock in some prices for next year.
Dun, dun, dun.
But I don't know. I have to look at my charts to really see it. But a 10%, I wouldn't 10% is nothing, right? So I could see a 10 or 20% drop in, maybe more than that in most crops. I don't think that's out of the ordinary. I'm just bearish. I still remain bearish. So
probably a lot sooner before anybody else was. I mean, a year and a half ago, we were still having a party. Yeah.
I had some sell signals trigger in January in Durham. It's kind of interesting because in that year, I published the idea in December, raised it actually, the sell signal in January, and then it's kind of funny. Once it broke that level, the selling just it's so weird. I don't reach all the farmers and all the Durham farmers, for example, right? Just a fraction of them, but it made a new low, and I had grain buyers tell me they bought more Durham that week than they did in the previous 2 or 3 months, and it just, once the selling starts, and that price went straight, and it went down like $15 or something in a few days, right? So it's quickly from 19 or 20 down to $15. So.
I wonder, for a producer, what do you recommend? I mean, beyond your services, obviously, but what do you see in your part of the industry where you've got folks giving recommendations? Some are fundamental, some are technical. There's all kinds of different advice out there. Should a guy or gal follow a couple different newsletters? Take what resonates with you, like sounds good in your body kind of thing, like you're talking about? Or what do you suggest for people to navigate these markets?
Well, for example, I learned from 3 or 4 or 5 different resources, and I combine a bit of each one of those my mentors into my practice, I'll call it. I'm a firm believer in information. I get tons of newsletters every week, and I don't get through them all every week. There's just too many. So I'm a firm believer in aggregating information. It's just finding what resonates with you, finding something that makes sense. I think I think a lot of the information I see is just packaged differently. The news is the news, so um, I'm not sure how many newsletters you need to get the news, how many news aggregators you need, type of thing. But
Yeah.
I think having the fundamentals are a great conversation piece. There's definitely value in that. It's just hard to trade or hard to make a decision. I feel it's hard to trade and hard to make a decision off fundamentals. So.
What do you see producers doing? What percentage of the folks out there would have a market coach or read newsletters or just sort of go off gut instinct or what it said at the coffee shop? What do you think? How does that pie chart look like?
I think a lot of people are getting information from a lot of guys I talk to get information from the grain buyers.
Yeah.
I think people are. I know some people do definitely pay for some coach, advisors. I don't know what that percentage would be. But I think the track record has been historically disappointing. So I do hear a lot of people complaining, right or wrongly. I think often it's wrongly, but they're upset with the advice they've gotten in the past. So whether they're still paying for that or not, I don't know if they are. I think a lot of producers are getting information, but I always hear the complaints about it, right? So you never hear somebody did something good. You always hear the complaints, but.
Well, it's interesting because I think that, one thing that my brothers taught me in business is that why make these decisions alone? Because if you're wrong, then you're just wrong alone. But if you're wrong with others, at least you can say, well, we made the best decision that we could at the time, and you work with experts that know the business, and it helps remove some of this emotion. Like one thing I noticed about trading is we want to go secretly off into the corner and build a pile of gold. And we want to have that golden goose. I mean, I worked on a lot of the stuff that you're talking about for 10 or 15 years in my spare time, just out of an interest and passion. Frankly, I've completely given it up because I find it fascinating and everything, but I know that I get a pounding every time I go to the market. It's like akin to being a world-class poker player, in my opinion, if you can consistently take money out of the markets. It's simple, but not easy. So I know there's a question in there somewhere. But I don't know, do you want to speak to that?
I'm a firm believer in information, right? So, when I was farming, when I was in the grain hauling business, I was absorbing information all the time. I know every farmer I'd go to, I'd learn something from. Every farm I went to, I learned something and brought it home and practice it. Now, the key is, for me, it's always been the key is to, it's like my indicators in my chart. The more indicators that point to an idea, to a thesis, then I'm more apt to use that one. I've tried being contrarian in my life. It's right. It's a fool's game, fool's errand. But in my mind, so yeah, I think information at a farm level. If you have a number of resources that you feel good about, that resonate with you, that you understand, I think you should embrace them. I market mine as complementing your marketing plan. Right. I would love to be your one and only person, but I do believe it's good to have more resources to draw on. I really do. And if I'm not a fundamentals guy, but get a fundamentals newsletter too, right? It's have an understanding of the market, of the sandbox you're playing in.
Yeah, you've talked about the producer mentality, about how sometimes they might see the grain buyers as being less than scrupulous, and in general some people have stereotypes, and I think there's a stereotype about market tellers like yourself about how much they're right and how much they're wrong. But how do you trade in that currency of being right? I mean, there's an expectation that if you're the expert and you're making a call, and how much do you feel like you are right, or how do you hedge that? Like 80% of the time, enough to be enough for horseshoes and hand grenades and not lose your shirt? Or
well, I still have a Telegram group where I was very active publishing swing trade ideas. I would track the win-loss record, but but more importantly, the gains. So what people, when you're in trading, your win-loss record matters to a point. So for example, a gentleman on Twitter, he's a renowned analyst, trader, and he says, his name's Peter Brandt, and he says he figures he's right 50% of the time. Steve Cohen, the owner of the Mets, one of the greatest traders of all time. I forget the name of his fund, Citadel maybe. No, it's not Citadel. He has recently quoted in the last number of years that his top trader has a win-loss record of like 63%. And the rest are between 50 and 60%. But when in the trading realms, what's important is to keep your losses small and take the first loss. And that's really on your farm too. When that trend breaks, you got to take the first loss and keep the losses small on the price, or you ride Durham from $22 to $11, right? So it's hard, but selling is hard to do. But as far as an analyst goes, what I do, I can't really. I have a win-loss record, but it doesn't really. I don't publish the win-loss record. What I do is benchmarks. I take the average price from my price indexes over the years and the high price, and if I can get within, my goal is 90% of the high price in the year, and if I can, be within. If I can beat the average price through the year, then I consider that a success. So if you were to sell incrementally every month, if I can beat that price, then I feel I'm providing some value.
It's such an interesting thing. I always think about that. As a producer, wouldn't you want to just take the average price? Any expectation beyond the average price for that year, sell on a regular basis, sell a certain portion. I mean, anything beyond that, you're just speculating. Unless you have somebody or some way of speculating, how can you beat the market? Like, what percentage can you desire to beat the market by? And if you don't have a significant edge, why wouldn't you just be happy taking the average price?
A friend of mine, when he was farming, he used to sell every Tuesday and Thursday. And the truck would come Tuesdays and the truck would come Thursdays, and that was his marketing plan. And he probably did all right,
Seems like a baby.
Yeah, but I feel I have an edge in the marketplace, and I feel I propose to, I'm willing to share that edge or what I feel to be my edge. And if I can benchmark it and I can prove that edge, then I feel there's value in what I'm producing. So.
Well, I mean, I just find this also fascinating. I talk about the markets forever, but we should start bringing it home. But I did want to ask you before we go to, do you see anything new under the sun? I mean, how long ago and who was it that said oats knows? I mean, some of this stuff, like you say, goes back since they started, making candlesticks out of rice charts back in the day, and they're just as true or more than ever, despite all this technology. Is artificial intelligence or anything else under the sun going to change the game fundamentally by which you want to be aware of it?
I don't know. I think, we've seen some algorithmic traders, and I don't think some of those funds are simply doing algorithmic traders. And outside of Jim Simmons, I don't know how many are actually successful. And I think maybe Renaissance had a subpar year for them last year, right? So that's my understanding. I don't know. I don't think I'm not threatened by AI at this point or anything. I don't think it's going to be that significant to us. But as far as the oats knows, I felt that in the past, absolutely. Interestingly enough, oats has got I call a bullish chart pattern. It looks kind of similar to Durham right now, and both of those are thinly traded. So, maybe oats knows, but that chart looks quite a bit different than Chicago wheat and Kansas wheat and corn, for example.
Well, I love through serendipity that we could find a positive note to wrap this up on, because so far it's kind of been, unless you're short, which I wonder, why folks too that have something in the bin. I mean, you're already long, so you've already taken a risk, you're already taking a position, using options as low risk tools, like even just buying some puts in case things go down to hedge your position, and pay a bit of a premium, maybe give up a little bit of your margin. Do you use those tools? Do you use spreads? Do you use options or anything? Do you recommend those to work your calls? Pardon the pun.
I got a love-hate relationship with options, okay? I've had extraordinarily success trading options.
Oh,
And I've
really?
had, yeah,
Yeah.
and I've had extraordinarily catastrophic failures trading options. So,
Yeah.
and the reason with the failure was I didn't honor my plan. I didn't honor my plan. So I didn't get out when I should, right? So I'm not a big proponent of options. Options are tricky. I feel it's difficult enough to to get the direction of the market, let alone consider time and the various the Greeks they call them, the various factors that go into the option pricing. You have a time decay, and that I don't like talking options to people, right? I realize they're a good tool and they're cheap, and when you buy something you kind of limit your downside, right? But options go to zero really quickly, really easily. So yeah,
Maybe that's why the best way to treat them is just to do like old Andy Sersky did. He really got me into selling covered calls.
Oh yeah.
And I still think there's a lot of merit in that program. But I used to really enjoy his article, and I talked to Andy, and I actually was on the Manitoba Egg Days board with his brother Ernie, who's quite the card as well. But even for the entertainment value or the wisdom, and some of it was just good old fashioned sound financial advice. And I guess that brings me to a thought too, and maybe you can comment on this and wrapping it up. Oh, I have two more questions. But yeah, it makes me think about, these vehicles in our life, right? I think about our business. I think about our personal relationships, our friendships, and our romances, and I think about our children and stuff like that. At 52, these things all shape us and impart wisdom and teach us the hard way how to become better people and more character and discipline and the value of austerity and sitting and waiting and just all those things, right? Like, what has it been to you to study the markets personally? How has that shaped your character? And what is a gift that's been imparted on that level?
It's humbled me. Yeah. I can't stress enough how difficult and painful that this process has been, right? So what I did a few years ago, I took up golf, and I don't golf anymore, but one year I decided I was going to go golfing. And I decided that when I found that using my driver, I had no control over my ball, and I would just get upset. So I started playing with my 4-iron. That's what I would, even today, if I go out and round a golf, guys get upset with me because I'm using my 4-iron off the tee, but I did that in order to begin establishing some discipline in an undisciplined life.
Yeah.
And I'm more disciplined now than I was when I started, and in part because you have to learn to be, if you're undisciplined in your life, you're going to be disciplined in your personal life. You'll be disciplined in your business and other endeavors. So I think that's been something I feel I benefited from, and I've developed a pretty high stress threshold, which started when I was farming, and then I went farming on my own when I was 28 or so, and then I developed a stress threshold there, and then through the other businesses and stuff. But yeah, so I'm good. At the end of the day, this stuff doesn't matter, right? So you learn to focus on what matters and what doesn't, and I'm getting better at that. So that's all part of the trading too. You take a loss here, whatever, right? Just move on.
Don't take it personally.
No.
Maybe it's good that your uranium stopped out. I feel a little bit, like maybe there's hope for mankind here. So if we were to get together on the podcast in 3 years, or maybe you'll have a podcast, what if you look into the future, where do you see yourself, your business, Trent? What are you moving into? What are you most excited about? What has to happen for you to be a success?
Well, I feel, I think my wife's, I can get kind of, I don't know how you are, but I think it's quite common for men, and I'm certainly no exception, where you kind of question your success, where you are in your life and what your successes are. And I guess what I'm finding right now in my life, what's more fulfilling than anything else is developing friendships, passing on some knowledge. When I was young, I always gravitated to the older people, and I would listen. I'd go for lunch with these guys my dad's age, or breakfast, I guess it was, my dad's age and older, and they would say something to me, and I wouldn't be till I was underneath my seat or inside my combine when I'd realize what the message was. And they took an interest in me, and so that's, now I've had a few young guys, they're interested in what I do and interested in what I have to say, and I'm interested in sharing with them. And if they can avoid the mistakes I've made, I guess that's what it is. I started the newsletters just to help people avoid the mistakes and the pain that I felt. And that's what my goal's been. So, yeah, so eventually I want to, have my own investment vehicle. Those opportunities are starting to present themselves. It's interesting when you publish something, whether it's a podcast or a newsletter or write an article in a newspaper, people take notice of that. And, I think it takes some testicular fortitude in order to put your name on something and put yourself out there. And I think people, they tend to recognize that. And so, yeah, I'm getting different opportunities, and this is just this is a stepping stone for me. It'll be more in the investment world down the road. So,
well, I truly admire what you do, both from the point of view of getting to play in the markets and look at those beautiful charts every day. Oh, I don't know if there's hardly anything more sexy, but we won't go into what we find sexy in life. But I always too, when you talk about testicular fortitude, I don't know what the female equivalent is. I guess we won't go there either, but. It takes a certain kind of courage. I talk to agronomists and they say, I'm not a salesperson. In fact, they kind of abhor that used, car salesman mentality. I don't blame them. But the fact is, when you have to sell yourself as an expert, I don't know what could possibly, if you got a product, I mean, you can debate how good is it, bad is it, or what's the, Ford, GM, Dodge. You can debate that, but, what you're selling is your personal credibility, your personal knowledge, what you're sharing of value. That takes a special kind of person to, as we talked about at the beginning of the podcast, going from a learner to planting your flag and saying, actually, I feel like I've crossed that Rubicon, ran the gauntlet, I've gone through the pain, and I want to share these shortcuts with you so you can do better. But I'm an expert. So hire me or work with me. I think that's exceptional. I think that's really exceptional. So congratulations on reaching that point. How do folks get a hold of you, Trent, if they want to work with you?
Well, they can go on my website, klarenbach.ca. It's KLARENBACH.ca. I'm on Twitter, Trent Klarenbach on Twitter. And, my number's in the phone book, and I'm in Kindersley at the moment, and next year I'll be in Saskatoon full time, so more central location to the province of Saskatchewan.
I think, folks, you better sign up so you can get those downside targets and go short the market when this, or follow this man when he's long or short. I'll have to text you when I see things. Are you long? Or are you short? Or where are you going, Trent?
Yeah,
I love it. Well, I really think it's cool that we ran into each other, and your strangers become a friend, and we've had lots of interesting chats outside of the scope of trading as well. So you obviously have spent a lifetime learning, and sharing that knowledge with others is powerful. So way to go on that, and I'm sure that anybody who has been working with you or will sign up with you in the future is getting value, and it always pays to have a second opinion in the market before you plunge.
Yeah.
Let's say.
Well, that's true. I think opinions and information, like get other resources. Hopefully I'm one of your packages, but part of the package. But I mean, it's information's gold. Information's power. I think back to when you and I met up at Langham at Ag in Motion, and we're at booth across from each other there, and eventually I said, I got to talk to this guy. I don't want to talk to you, and I didn't think he's not interested in talking to me or anything. But anyway, he came over right away and wanted to know what I was doing. And it was, then we've had some other conversations that are, maybe we share them in the future. Maybe, who knows? But
I hope so. I hope so. All right. Well, thanks for coming on the show, Trent, and good luck with everything in the markets and producers. If you're looking for some guidance or another noggin to, put two heads are better than one. This is the guy. So check him out online. Thanks for coming on the show, Trent.
My pleasure, Dan. Thanks a lot.